Progress.
Good afternoon, everybody. This is Richard Ift from the Federal Insurance Office at the U.S. Treasury. I'm joined by my colleagues Sherry Roulette and Jeremy Pam. And also we have Mike McCauley from ISO on the call, who is directing the collection and aggregation of the data through the portal, which is operated by ISO. Not on the line today, although he often is Aaron Brandenburg with the NAIC, who coordinates the data call from the standpoint of the state regulators. He was unable to make it today. We will, you're probably well aware of the setup, but basically the forms that are generated by this get reported separately to the ISO portal for U.S. Treasury, as well as to a portal operated by New York State. So anyway, from a mechanical standpoint, we're going to basically walk through the reporting forms today and give you our take on them. If you have any questions, you can send them through the chat function on this webinar. What I would say is, unless you can certainly send them to everybody if you want, but if you direct them to Sherry Roulette, she will basically collect them and field them to me as we go through the data call. And in that, if you do that, your questions sort of remain anonymous to you. We'll be the only ones to see who's asking the question. And as I advised shortly before we turned the tape on, we also have a recording of this webinar being created. Once we're done today, that will be saved and we'll post it on our website for those of you who enjoyed it so much that you wanted to look at it again at some point. Anyway, to get started, as many of you I'm sure know, this data call is required under Section 104H1 of the Terrorism Risk Insurance Act. It is designed to provide Treasury that it will use to periodically analyze, among other things, the effectiveness of the program and the competitiveness of small insurers in the terrorism risk insurance market. State regulators collect similar information for regulatory purposes with respect to insurers under their supervision. As has been the case for the past number of years at this point, Treasury and state regulators are coordinating in this effort with a consolidated approach that will allow reporting insurers, for the most part, to provide the same data set to Treasury through ISO and state regulators through a portal operated by New York State. By doing so, insurers can thereby satisfy their obligations to both entities by submitting the same data to two different locations. So just as a re-emphasis on that, there have been issues in the past. People think they're done by uploading to one portal or the other. You do need to do it to both, because the collections are managed separately on those ends. And if you send it to Treasury but not to the states, they don't get it, and vice versa. As far as the reporting deadline, there is a regulatory due date for the annual data call of May 15th. That has been extended just by one day this year to May 16th, since the 15th falls on a Sunday. I would note that the date was set in light of FIO's statutory obligation each year to provide a report to Congress by June 30th. So because of that deadline, because of our deadline on the other end, we really aren't in a position to provide extensions to the, this year, May 16th date. So we would encourage everybody to get the data call done as soon as possible, and certainly by the 16th. As in past years, Treasury is conducting training webinars for each of the 4 reporting templates, which are for small insurers, non-small insurers, alien surplus lines insurers, and captive insurers. This webinar will address small insurers. This year, small insurers include all insurance groups or insurance companies that are not part of a group writing TRIP-eligible lines of insurance, who had a calendar year 2020 not 2021. That's the reporting year, but we do the measurement based on the prior year, 2020. Calendar year 2020 direct earned premium of $1 billion or less in TRIP eligible lines premium, or alternatively a policy surplus of $1 billion or less in 2020. Again,
Richard,
yes. Mm-hmm.
We have a question.
Okay.
The question is, 2021 was our first year of business. However, we are grouped together with other entities. What would we report for our 2020 policyholder surplus and 2020 TRIP eligible DEP?
What I would, this is actually, it doesn't come up much for the data call purposes. It is actually referenced in the statute or certainly in the regulations because obviously, insurers do get created and start writing business, but, and they are entitled to access TRIP immediately, but, obviously there's no prior year experience in the first year of operation. So basically what the rules say is you basically come up with an estimate that basically essentially estimates what you basically come up with an estimate of your 2021 experience. So what I would ask you to do is for this particular entity that started writing in 2021, just report your surplus and premium figures that you're seeing in 2021 for 2020, because in a, worst case scenario, the program's activated and you have a claim, that would be how it would happen. You would end up paying a deductible that would be calculated based upon the actual year of the event as distinguished from the prior year, given that you don't have any experience for the prior year. So I hope that makes sense. But bottom line, yes, go ahead and use your if you don't have 2021 figures, use your 2021 figures. Let's see. I think where I was is, yeah, so it's a billion 2020 in either direct earned TRIP eligible lines premium or policyholder surplus in that year, and that's again on a group basis. That 1 billion figure is actually a change from last year where the threshold was 900 million for policyholder surplus and TRIP eligible DEP. However, because of the sort of changing metrics of the program, that's now increased to 1 billion. However, because those amounts will not be changing until the current sunset date of the program in 2027, for those of you who are going to be continuing to do this, it should stay at 1 billion for the next, 5+ years at this point, assuming no further changes from Congress in the interim.
Next question, Richard.
Yep. Mm-hmm. Yep.
The question is, I sent our registration form on April 12th of 22 and have not received our templates yet.
Mike, you want to field that one?
I will entirely field that one. Richard obviously will be introducing me very shortly to give an update on the status. Richard, do you mind if I do that right now?
Why don't you go ahead and do that now? I'm sure people in the call on the line are interested in that. So go ahead and give your status of where.
Okay, because yeah, it's pertinent. So basically, all registrations received through 3 p.m. Eastern yesterday have been processed, and each recipient should have received a secure message from Verisk with the SFTP credentials in order to access the data templates. If you have not received that information just yet, I'm going to provide in the chat feature my direct contact information as to who to reach out to. So the individual who posed that question, Sherry, ask them to go ahead and reach out to us directly subsequently.
Actually, there were 2 participants who have stated that they haven't received their templates yet. So you should have it. people
Okay.
contacting you.
That's entirely fine. But like I said, every registration we received through 3 p.m. Eastern yesterday has been processed and sent. If there has been an issue and you have not received it, we will work with you to ensure that you do receive the information appropriately. So I will shoot the information in the chat function right after this in about 3 seconds. And with that, Richard, I'll go back to you.
Okay. Okay. Again, back to this sort of calculation really of whether you are a smaller insurer or not. Please keep in mind that if you are an insurer group that is clearly under the policy surplus holder figure, and you do need to be under both to be classified as a small insurer, but if you're clearly under the policy surplus holder amount, but you're near that cutoff figure of $1 billion for premium purposes, certain premium allocated to lines for state reporting purposes is not included in TRIP and would be excluded from your calculation of your TRIP eligible DEP. So this would include personal lines premium that ends up getting reported in lines like fire and allied lines, which, are the bulk of which is commercial, as well as professional liability insurance, which is, otherwise within other liability, which is a TRIP eligible line, but there is a statutory exclusion for professional liability insurance, or E&O, which falls within that. I should note it's E&O, but not D&O. So D&O is clearly within the scope of TRIP. E&O and PL is not. The form instructions, and I'll pivot over to those at some point, do contain a comprehensive list of premium that gets excluded for those purposes. So, evaluate that before you concluding whether you should report on the small insurer form or the non-small insurer form, given that the latter does require more information to be reported. The webinar for non-small insurers was held earlier today and will be posted on the TRIP data call website in the near future in case you determine it ends up being relevant to you and you missed it. We will also be holding 2 more webinars tomorrow, one at 11 o'clock Eastern for alien surplus lines insurers, and a second at 3 p.m. Eastern for captive insurers. I also wanted to mention that once you determine that you qualify as a small insurer, there is a reporting exception for any small insurers that wrote less than $10 million in TRIP eligible lines premium in 2021. Now, this is TRIP eligible lines premium as defined by TRIP, and it would again be excluding premium from such areas as personal lines premium that otherwise falls in a TRIP eligible line. If you are below this threshold, you actually don't need to register or report. However, if you fall in this category, it would be helpful if you could notify Treasury and ISO that you are not reporting on this basis. Otherwise, we do some checking sometimes to make sure whoever's reporting that should be reporting is doing so. So we might reach out if you don't let us know otherwise. Also, even if you are slightly above the keep in mind though, if you're above the $10 million threshold at all, we are going to require you to report. There are no, it's sort of an either or thing. 10 million and one means you report. Actually, I think it's, 10 million. I guess it's 10 million and below. You don't have to report. If you're at 10 million and one, you do expect to report. Now, as I mentioned, TRIP operates on a group basis. So the reporting should also be done on a group basis. You would only report as an individual company if you are not affiliated with another company writing TRIP eligible lines of business. In addition, remember that any alien surplus lines insurers that are part of a group should report with that group. The alien surplus lines insurer template should only be used by alien surplus lines insurers that are not affiliated with a non-small or small insurer group. There have been no substantive changes to this that year's data call for small insurers with the not insignificant exception of the cyber worksheet, which we will go over in some detail when we get to that. So if you have been responsible for your organization's reporting in the past, you should find the process to be straightforward and familiar with the possible exception of the new cyber questions, which we will go into in more detail. The process to start the data call, and obviously it sounds like many of you have done that already. You go to the data collection website, which is www.tripsection111data.com, and download the registration form. You will then fill out this registration form and email it to the address provided. The point of contact you list on your registration form will receive an email from Verisk ISO with a link to a secure portal. This secure portal will contain your required reporting forms. We do get quite a few questions from insurers that, just make sure you do need to register before any of those forms will be provided to you. Simply because you've registered in the past, forms won't be sent to you automatically based upon your prior reporting and participation. Once you have collected your data and completed the reporting form, you will send it back to ISO through the same secure portal. The form will be provided to you in Excel format. However, if you prefer to report using a CSV format, just notify Mike McCauley and Verisk ISO of that, and they will provide you with specifications to submit your data in CSV format instead. Now, as I pointed out earlier, remember that although this is a consolidated data call, you do need to separately submit your completed reporting form to the New York portal for state reporting purposes. Again, submitting your form to ISO will only fulfill your obligation under the Treasury data call, and submitting only to the New York portal will not satisfy your Treasury reporting obligations. Now, with regard to workers' compensation information, as was the case last year, in fact for the last few years, if you write workers' compensation insurers, the information for most of the workers' compensation fields on your form will be submitted on your behalf by NCCI, the California Workers' Compensation Insurance Rating Board, and the New York Compensation Insurance Rating Board. NCCI will also coordinate with rating bureaus in the states where it does not operate, other than New York and California, who handle that on their own. So Treasury will receive comprehensive nationwide workers' compensation information through this process. Although workers' compensation writers are not required to submit certain data elements, please remember that the NCCI and rating bureaus will not register on your behalf, nor will they complete the questions related to workers' compensation exposure on the reinsurance worksheet. As a result, even an insurer that only writes workers' compensation insurance still must register for the data call and certainly complete at a minimum the reinsurance worksheet in full, even if all the other fields you need to report would be reported in by the rating bureaus.
So a question?
Yeah. Mm-hmm.
The question is, just to clarify, all required small insurers need to submit forms to ISO and the New York portal.
Yes. Yeah, it's they're the same forms. When you get the forms from ISO, once you finish them, upload them back to ISO through that portal. But New York State Department operates a separate portal that you need to access and literally upload the same form. No changes necessary. You just upload the precise same forms there, and then you're done. You don't need to change anything in what you complete for this form. In fact, you're instructed not to. We don't want you reporting different things to us versus the states on this. I should say there have been, and I don't really know the answer to this question, there have been past circumstances in past years where the states have required some additional reporting that is not required by Treasury. I don't know that that is the case this year. However, that would be something that you'd be advised of by either the state departments or the NAIC. So that is that process.
Richard, if I
Yep.
might just opine a little bit here on there, just understanding what the process is. As it relates to submission to the New York portal for the NAIC, just note that the forms are the same, but the naming conventions do differ. So I would just suggest that you visit the NAIC website to identify what the appropriate naming conventions for submission of the files are. That's outside the context of this, but just wanted to bring that up because the naming convention is important.
Yeah, that's come up, and it has interfered with people's ability to get it into both. So thanks for clarifying that, Mike. Yeah, it's the same, literally the same documents, but you will need to, well, use different naming conventions on the one submitted to one portal versus the other. Back to the workers' compensation. I should, just as a call this out, even though the rating bureaus provide most of the information on sort of primary workers' compensation coverage, any insurer that writes excess workers' compensation does need to provide that information directly in all cases, because that is not information that either NCCI or the other rating bureaus get. So they're simply not in a position to report it to us, so we need to ask you for it. So let's see, question. If you have any questions as you collect your data and complete your reporting forms, your first action should be to review the instructions for the small insurer form that you will be completing. We have those up on our website, which is actually where the screen you're looking at is coming from. See the small insurer form, that's what we were looking at. There is a separate instructions document, which actually literally for each data element, by sort of an Excel cell number, tells you what we're, provides a little more detail on what we're looking for and, how to do the reporting if there's any questions. So that should be your first port of call if you have any questions. I'll come back to this form later when we have some more discussion of it. So in addition to the actual instructions on the same Treasury website where the forms are located, we also have a document that provides examples of how to report various data elements, particularly those that may not be immediately intuitive. And let me just go back, and if you see, let's see, it's right under the forms. There's a sample of sample fact patterns. If you click on that, that gives you essentially a sort of cheat sheet on some of the, what I would call, perhaps less intuitive, things that may come up during your completion of these forms. So hopefully you will find that useful as well. I should mention that document that I didn't click into, but I went to the where it is. Though the examples provided on that were used as were prepared using a non-small insurer form as an example. So you might see some cells on that instruction sheet that you won't see on your small insurer sheet. But, if you don't see them on your sheet, obviously you don't need to fill them out. So if you still have questions after reviewing the instructions, you can obtain help in response to a specific question by emailing TRIP section 111data@iso.com. In response to this email, you will get either a written email response, a call from ISO, or a call from Treasury. Alternatively, you can directly call ISO or Treasury to ask your question. The phone number for Mike McCauley at ISO is 201-469-2323. My phone number at Treasury is 202-341-2501. And Sherry, I actually don't have your number right in front of me. So can you provide that?
Yes, I provided Richard and my contact information in the chat box. So
Okay.
if you can't see it, let me know and I'll get it to you.
You can also reach me through richard.if@treasury.gov or sherry@sherry.roulette@treasury.gov. And let's see, Mike has already given sort of a status of where things stand from ISO standpoint at this point. So I think we're going to go ahead and dive into the worksheet. And the goal here is to provide you at least some further explanation as to what information Treasury is seeking, and perhaps to provide some explanations for completing at least some of the worksheet. Again, as we go through this, if you've got any questions, we do have you all muted, but go ahead and type them into the chat box and direct them to Sherry, and she will bring them up, and we will certainly address all the ones that we get. Once you've submitted your registration with ISO, you will receive copies of the live Excel reporting templates from ISO through a portal. Of course, today we are just looking at a PDF copy that appears on the Treasury website. ISO will tailor your spreadsheets based upon your reporting needs, which include providing separate worksheets for each of your jurisdictions. But for today's webinar, I will be showing you PDF version standard reporting form, which is really just for ease of presentation. So keep in mind the individual Excel sheets you actually are receiving may appear slightly different. The first worksheet you'll be completed which is now what is up on the screen, is for insurer group affiliation. The purpose of this worksheet is to identify which entities you are reporting for. Again, reporting is done on a group basis unless obviously you are a single company, and all insurers will need to complete the worksheet even if the only type of coverage they write is workers' compensation. We do use NAIC group codes, both group codes and company codes, for tracking purposes. Any alien surplus lines insurers within the group should use the number assigned to them by the International Insurers Department of the NAIC. If you are an insurer that does not have a number for whatever reason, ISO will assign you a number for tracking purposes. If you have reported before, you should simply use the same company identification numbers that you have used in prior years. Now, in columns G and H, you will need to report your group's total 2020 policyholder surplus using the same that you would report for state statutory purposes, as well as your 2020 TRIP eligible lines premium. Again, these are the metrics which are used to confirm, that you are in fact a small insurer, and it's also used to calculate your 2021 program deductible, which you need to respond to in connection with the reinsurance worksheet, which we'll get to at the end. If you did report a 2020 premium figure last year that you now believe to be an error based on further evaluation, then please enter what you believe to be the correct revised number this year. Moving on to the next sheet, which is the premium sheet, direct earned premium. You will be reporting your direct earned premium by relevant NAIC line or subline. Remember that when reporting your premium, although TRIP is defined for the most part, with reference to the NAIC state reporting lines, there are some significant differences. Principally, NAIC lines 1 and 2.1, right in there, fire and allied lines, both include commercial and personal lines coverage, but only the commercial portion of this coverage falls within TRIP, and you should exclude any of the personal lines premium when you're doing your reporting. Similarly, professional liability and errors and omissions coverage are expressly excluded from TRIP. These would be reported otherwise for state purposes under other liability, line 17, but should not be reported here because, again, they're currently excluded from the program. The instruction document, which I pivoted to before, that does identify the difference between TRIP eligible and the state NAIC state reporting lines, so you can use that to ensure you're accurately reporting your TRIP eligible lines premium. Now, as per what I said before, remember if you write workers' compensation policies, hearing on this on line 12, it's NAIC line 16, of course. These figures will separately by NCCI, California WCIRB, and the New York Bureau. So you do not need to fill in those fields. That information will be merged in once it's reported by the Bureau. You will need, however, to still fill it. Go ahead, Sherry.
Question. The question is, we have a general liability multi-peril policy that has an excess of loss health component reported on annual statement line 17. If we can identify the health liability component, should we exclude it from the TRIP eligible lines?
If I'm hearing, is it, you said a health line, health insurance?
I'll read it again. We have a general liability multi-peril policy that has an excess of loss health component reported on annual statement line 17. If we can identify the health liability component, should we exclude it from the TRIP eligible lines?
If I'm just making sure I'm hearing this correctly. We need health liability, H-E-A-L-T-H.
That's right, health, H-E-A-L-T-H.
Okay, yeah, that would be excluded from TRIP. TRIP does not cover health insurance coverage. So yeah, I mean, that would be, if you could separate that out and not report that, that would be the appropriate way to handle that. And I think I was just about to say, yeah, the excess workers' comp field, which again, excess workers' comp fields line 13, those do need to be reported by you because the bureaus don't have that information. Just sort of going through this, column D, your total TRIP eligible DEP, that will actually auto-populate once you fill in, columns E, F, and G, because that's column D is just going to be the sum of E, F, and G, which break down your policies based upon whether terrorism risk coverage was declined, provided for no cost, or provided for a premium. If you provide a number in column G, then column H should contain the actual amount that was charged for terrorism risk premium, and column H is thus a subset of column G, which shows the policy's overall premium. So just an example, if you're an insurer that issued one policy, it was a policy for that charged $100,000 of premium. It was a fire policy, and terrorism risk insurance was provided, and $5,000 of that $100,000 was for terrorism insurance. You would put $100,000 in line G and $5,000 in line H. Let's see. Premium should be entered on a direct earned basis for calendar year 2021. That means that if you have a policy that started before 2021 or ended after 2021, you should only include the premium that was actually earned in 2021 for that policy. So again, the TRIP program is for the very most part, which we won't get into today, based upon direct earned premium as opposed to written premium. So everything in terms of premium that you enter into the these templates will be on a direct earned basis. If a policy covers multiple states, the premium should be allocated to each state proportionally in literally the exact same manner as you reported it or would have reported it for state reporting purposes. I think that's all we have on the premium sheet. Next sheet is a standalone terrorism template. On this one, you will be asked to provide information about any standalone policies you have that were issued to cover only terrorism risk. Again, this is only coverage for only terrorism risk. To the extent the policy provides coverage for anything else and the terrorism is just a portion of that, then it just gets entered on the prior worksheet. And again, the premiums associated with these standalone policies, if you wrote any, should also be reported in the appropriate lines on the first sheet. But so whatever you report here would be included as well in the appropriate place in the prior worksheet. But again, this one is literally just focusing on standalone terrorism policies. We do, for comparative purposes, you'll see we ask for any coverage, standalone coverage you provide for non-certified acts of terrorism, that is, terrorism that isn't coverage that isn't dependent upon the Secretary of the Treasury certifying an act of terrorism. We do that for comparative purposes, sort of see what's going on in the market. Data on this sheet is reported on a nationwide basis, not a state basis, so it's just a one-shot deal. And of course, as you'll see in the fields, in addition to the DEP figures that are requested, you will also need to provide data on the number of policies issued and information on the exposure and limits of liability. All right, next is our significantly changed one this year, which is the cyber worksheet. The information requested here is subject to some additional items that have been requested or are being requested for the first time in the 2022 data call. So I am going to go over those fields in some detail. While the categories of information requested have expanded, we are continuing to seek information in terms of the general format on both standalone cyber policies. That information gets entered into column C, and that's obviously just a policy that only covers cyber risk, as well as column D, cyber coverage provided as part of a package policy, i.e. an endorsement or a rider on another policy where cyber is simply part of the coverage, it's not the entire policy. You should not provide any information on this worksheet on so-called non-affirmative or silent cyber coverage. And again, that is where a policy might be determined to cover some sort of cyber loss because cyber hasn't been specifically excluded in the policy. We are only looking for you to report information on policies specifically written to cover a cyber risk. Now, lines 6 to 8, I'm sorry, lines 3 to 6, these first here, 8 to 9, number of policies, and 18 to 19, limits of liability. Those are requesting information concerning premium, number of policies, and limits for cyber policies in the TRIP eligible lines of insurance. This has been requested previously and is continuing to be requested. So you should continue to respond to these questions exactly as you have in the past. Now, line 7, right there, 10, and 20 request the same information concerning premium, number of policies, and limits, but as applied to cyber policies written in non-TRIP eligible lines of insurance. Again, while the information is the same as the sort of information we have requested in the past, we have expanded it to policies written in non-TRIP eligible lines so that we can assess the amount of cyber insurance that is currently not subject to the program. Our understanding, and that's part of why we're doing this, is that this will largely be cyber insurance that at least it is currently being coded, characterized, and otherwise reported for state purposes as professional liability insurance, which is subject to an express statutory exclusion under TRIA. These questions, assuming you write policies that are so identified, should be answered in the same way as you already have been responding to the questions for policies written in the TRIP eligible line. Now, finally, there are 3 categories of information that are being requested this year that certainly we have not requested this information in prior TRIP data calls. These are, if you go to lines 12 to 17, these are essential premium and number of policies allocated by size of policy, and that size is as measured by the number of the policyholder's employees. Lines 21, 24, limits specific, it's at the limits, the policy limits specific to cyber extortion and to ransom payments. And then last but not least, carrying over onto the next page, 25 to 30, this is actually actual loss information specific to cyber extortion and ransom payments. All right, let me go back now briefly to the instructions for this one. And to page 3. Actually, it starts on page 2. I mean, basically, the first bullet and the sub-bullets are literally just identifying the information we have not sought before, and which I've just sort of told you. And the second bullet is really the important one, which is sort of our expectations in this first year of this data call. To the extent you did not collect this information in connection with your operations in 2021, the year of the reporting on this. If you didn't collect it, look, we're not asking you to go back to policyholders and try to reconstruct this information through some sort of retroactive, inquiry. If you didn't collect it during those 2021 operations, we are not, obviously can't report it here. We assume, at least from the some feedback we've gotten, this could be the case for some of you, particularly with respect to the number of employees metric that we're asking for at this point. It does sort of seem to us that information concerning premium and limits, or limits and losses for cyber is something most insurers would be painfully aware of. So we would hope you were collecting that. But in any event, the test we're looking for here is, look, if you didn't actually collect it during the reporting year because, this expansion was proposed somewhat late in 2021, we get that. We're not going to go after anybody for not reporting on that. However, the standard we're sort of asking you to abide by here based on your existing capabilities, and we ask you in all cases to provide information as a full, and I'm reading here, a full and true statement of the information provided to the best of your knowledge, information, and belief. That's the standard which you provide all this information. We're certainly looking for you to do that here. If you did collect it, you do have it. We hope and expect you to report it this year. If you do have this issue that this requirement came upon you late and you don't have it, obviously we're not looking to try to make you report something you don't have. If you have any questions on this as to what you should be doing or think you should be doing, given what your current situation is, certainly feel free to contact me directly. Happy to talk with you through it in terms of what you can do and what you can't do. We would sort of emphasize, we would, given that this obviously is on everybody's radar screen now and certainly should have been when it was proposed last year in November, we would expect that this information is being collected in 2022, and I would fully expect these same questions to be posed next year with respect to the 2022 calendar year. So anyway,
Richard.
Yep. Mm-hmm.
The question is, if we did not track the number of employee categories for 2021, should we disclose it someplace?
Well, obviously, if you don't fill that in, we'll assume, I guess, that's at least an implicit statement that you weren't collecting it. I mean, we don't actually have a place on the form for that. I mean, I mean, Mike, I don't know if you have any thoughts on this. My thought is simply if you can't do it because you didn't collect it, and you're just not going to fill those fields in. And if you're filling information in on the other fields, which obviously show, I mean, obviously some insurers don't write cyber. If you have zeros on the entire form because you don't write cyber, our assumption is you don't write cyber policies. Our assumption, I think, will be if you report information generally in all the fields except for the ones about information allocated by size of the policyholder, then we're going to assume that you just simply didn't collect that information in 2021 and can't report it. I would sort of throw out, because it was interesting, it came up in the last webinar that we did have a question raised as to a carrier that said, well, they didn't capture it formally, but they seem to be of the belief that they were in a position to essentially allocate it in a reasonable fashion based upon their knowledge of the policyholder base they were insuring. I think the suggestion was they were a carrier that really wasn't insuring entities that had more than 100 employees. So, they were able to basically say all of their figures would fall into the small category. Obviously, and what we told them was, if you can do that, that's great. I mean, we would ask you to, put in what you consider to be a good estimate. We don't want you just making up numbers to put something in the field. We would prefer you leave the field empty if you simply didn't capture it and you really have no way to come up with those numbers at this point. But if you had, like that particular carrier, the ability to say, yes, all of our premium or these portions of our premium fall into these buckets based upon what our knowledge is of our policyholder base, then sure, go ahead and report on that basis. Mike?
Another question?
But before
sorry, go ahead.
Mike, did you have any further thoughts on this? Because I know this does get into the sort of whole data collection integrity, and
Yes. I would love to comment on this just for the moment. I do agree that the appropriate methodology there would be to report blank if it's not there. But if you have any level of detail, to submit an email to the TRIP Section 111 data@iso.com explaining or providing any additional color you could have so that we have it on our side. It will not be provided to Treasury, but in the context of aggregating the data, it would probably be useful in that regard. So, the more information you can provide to the statistical data aggregator, that is ISO Verisk, would be useful, so that we can respond appropriately to any follow-up that would be my comment.
Okay, no, that thank you. I think that's a good caveat. There was another question?
Yes. The question is there a document which lists what lines are and are not TRIP eligible available?
Well, I would say there's actually a lot of them. It's actually specified in the rules. There's actually a provision of the TRIP rules, which are on our website, which actually lay out, here are the lines of insurance that are subject to TRIP. Here's a bunch of lines of insurance that are not subject to TRIP, because when Congress set all this up, they identified a number. I mean, basically what Congress said, is they said, we generally want property and casualty insurance writ large to be part of TRIP, except for all of these particular sections. what Treasury did when essentially to implement that, it was to basically identify, and I'm going back to the premium sheet because that basically tells you what they are. Our evaluation was the lines of insurance, the NAIC lines of commercial insurance that you see identified on the sheet that I've now have on the screen, lines 6 through 17. Those are the lines of insurance for state reporting period purposes that coincide with what's subject to TRIA. Anything that doesn't appear on that list is outside of TRIA. So I think that's the easiest way of sort of looking at this, and you can say this is what's in, and if it's not on this sheet, it's out. So if you have any more, specific questions on that, like as a particular line, you can certainly submit those directly or to us. But that's if you look at this sheet, and there's basically the same listing on the exposure sheet because we also collect information on a line basis on the exposure sheet. These are probably the best summary of these. Will tell you this is what we believe is within the scope of the program and how it's been set up. Okay, back to the cyber worksheet. So regarding the new information for premium and number of policies allocated by size of the policyholder, which is measured by the number of employees. Number one, we are requesting this for all cyber policies, so we're not asking you to break it out between the TRIP and non-TRIP eligible lines. Hopefully that makes it easier. The size categories are the same as those which the NAIC utilized for its business interruption data calls associated with the COVID-19 pandemic. I'm assuming many of you were required to respond to those, so it's literally the same number buckets as identified by the NAIC. And again, assuming, I think obviously the big issue here is assuming if you have the information available, obviously this would be, I think this is pretty straightforward. Obviously we are aware of that some of you may not have been collecting it during 2021. So to that extent, we've talked about the issues presented there. Regarding the new information concerning limits specific to cyber extortion and ransom payments, the distinction we are drawing here is between coverage for cyber extortion generally, and again, we're thinking about a ransomware attack. Obviously, a portion of the losses associated is the actual payment to the bad actor, which we understand an insurance policy could cover. But in addition to that, we appreciate that there's many other elements of loss that could be associated with that ransomware attack. Crisis management, data recovery, other sort of getting the business back up and running again after this happens. But there's a whole host of other things that could be in that category. The cyber extortion limits, and for that matter, losses question, we're looking for that information writ large. And, if your policy has a, limit that's associated with that. For ransom, the idea is if your policy has a different limit, and, the idea was, well, maybe you'll provide $1 million in coverage for cyber extortion risk generally, but you'll pay no more than, you have a sublimit of $100,000 for the actual ransom. If that's the case, then we're looking for the $100,000 on the ransom limit, and we're looking for the $1 million on the extortion, the general cyber extortion limit. Obviously, if you're a company that basically has one limit for all risk cover under a cyber policy, that's easy. You just put in the same limit for both sets of exposures, since your limit for ransom is basically your same limit for cyber extortion generally. So again, that's the distinction. If you have any more sort of detailed sort of questions on that, that's, we're sort of happy to answer those. But again, it's really looking for if you're doing anything to basically provide a lower limit for the actual ransom payment to the bad actor versus what you're otherwise covering under the policy. Let's see. And finally, and again, we are requesting this one here separately between policies in the TRIP versus non-TRIP eligible lines. Finally, on the last category, loss information specific to cyber extortion and ransom payments. Here, we're requesting it for all cyber policies combined, whether in TRIP eligible lines or not. The questions seek paid and incurred amounts for cyber extortion generally and paid amounts for ransom payments. And again, the actual payment, and we understand most carriers, if they're covering this, don't pay it directly. They may be reimbursing the policyholder, but this is for the actual amount that you are either paying directly or more likely reimbursing that is going to the bad actor for the ransom. That's what we're looking for there. And again, we're asking for the number of claims that such ransom payments are associated with. And finally, direct defense amounts for cyber extortion generally. And again, without any effort to segregate that to ransom payments specifically, we're seeking that on a paid and incurred basis. I mean, look, we appreciate that this is a lot of new information. I think everybody in this call appreciates the seriousness of the current ransomware situation. So we are doing what we can to sort of get on top of it and understand what is going on here, and hopefully, we can help. So, but that requires us getting more detailed information on this than we have in the past, and that of course means that we come to you to get that information. So we think everything on here are concepts that insurers that are writing in the cyberspace should be pretty cognizant of at this point. But again, we can respond to further questions either at the end of the prepared remarks, or if you want to reach out to us directly, we are happy to continue to engage with that. Okay, moving on to the next one. This is not a new one. The exposure bases by jurisdiction. Next, we're asking you to report your exposures on a jurisdictional basis. As with reporting DEP, you provide data based on those NAIC reporting lines or sublines, the same ones we looked at on the premium sheet, and to identify exposures where terrorism coverage was provided or not. The purpose here is to calculate the total potential exposure under the policy. In other words, the most that you might have to pay under the policy in question. This worksheet does ask you to specifically identify policy limits where nuclear, biological, chemical, or radiological, or NVCR risks are not entirely excluded. So, and this is requested for both property and liability exposures. So in column D, right here, you will be providing policy limits of property policies where terrorism risk insurance is provided. Then in column E, you will look at that same university of policies and report policy limits for only those policies where NVCR coverage is not completely excluded from the policy. So if you happen to have NVCR sublimits in place for those exposures, those should be reflected accordingly in the exposure recorded in column E. So I think by definition, column E should be a subset of the figure identified in column E. The same reporting method will be used in columns I and J to report limits of liability issues. Also, again, to clarify, if a policy provides terrorism risk coverage for any type of NVCR exposure, even if some types are excluded, then we're asking you to record this policy as not excluding NVCR coverage. So, in other words, if a policy explicitly excluded nuclear risks, but would cover chemical or radiological risks, then you should be recording the policy information in columns E and J, respectively. In addition, if a policy only provides, however, if a policy only provides MBCR coverage as a result of fire following laws, which are in place in certain states. But otherwise, if you just looked at the policy, it would, on its face, purport to exclude all MBCR risks. Then you should not report that in your calculation, and that would be a 0 in connection with that policy. So we know what the fire following states are, so we're really looking for you to report here based upon what your policy provides on its face, even though we appreciate that in some states, for example, New York, a nuclear exclusion would not eliminate fire coverage for a fire caused by a nuclear event, at least in New York. So anyway, that's what we're looking to do there. This sheet also requests information on policyholder deductibles. You'll see right here, or self-insured retentions, which is the same as we have done in previous years. You should only do this in connection with primary level policies that reference a policyholder deductible or self-insured retention obligation. Don't do that in connection with obligations under high-level excess policies, because if you have multiple insurers reporting what's essentially the same deductible or retention, we would get a lot of double counting. If a policy contains multiple deductibles or self-insured retentions within a state, depending upon the property or the location or type of operation, please use the lowest deductible or self-insured retention within that state. You would use the same logic when filling out the exposure worksheet for the United States as a whole, and use the overall lowest deductible or self-insured retention for the policy. I also wanted to review some of the differences as to how exposure information should be reported as compared to premium. First of all, you want to report your exposure information on a per occurrence basis. Next, whereas you would divide premium information proportionally by jurisdiction, with exposure you would report the relevant limit for each jurisdiction, even if an aggregate limit might cap your exposure across multiple jurisdictions. So, for example, if you had one policy providing $1 million of coverage in 2 states, let's say California and Oregon, you would report $1 million of exposure on each of California and Oregon worksheets, even though the policy had a single overall limit of $1 million. For this one, you also need to fill out a U.S. worksheet, which aggregates all of your policies together. In this example, on the U.S. worksheet, you would provide the overall policy limit and take into account any limits that might apply across multiple jurisdictions. In the example I just gave, $1 million would be overall U.S. example because it is a single policy providing $1 million in coverage. Also, as a reminder, if the policy has a single occurrence limit, you should use that single occurrence limit. If there is no single occurrence limit, use the policy's aggregate limit. Another difference between the DEP spreadsheet and this exposure spreadsheet is that you should be aware of is you should be calculating exposure based on policies that were in force on December 31, 2021. This differs from the premium worksheet, which asks you to include all premium earned in 2021, even if a policy expired before December 31st. So in the exposure spreadsheet only, if a policy terminated before December 31, 2021, you should not include that policy in your calculations. For this one, it's basically a 12/31/2021 snapshot. Once again, the rating bureaus will provide payroll information for the workers' compensation, the payroll line in column N. But you will still need to provide the payroll information for any excess workers' compensation policy. Okay, moving to the next one. This is the places. This is the places of worship template. This form collects data on the availability and affordability of terrorism risk insurance for places of places of worship. This year's worksheet remains the same and is requesting that data be reported on a national basis and categorized by property, liability, and workers' compensation policies. We only want information here on policies written for places of worship. When you're reporting this data, please do your best to only report coverage related to actual houses of worship, i.e. synagogue, mosque, church, and exclude any affiliated religious organizations such as hospitals or schools. You'll see that we have asked you to report this information under a specific industry code. We are aware that different insurers use different systems for classifying their policies, so we provide you with the option to report your data using one and only one. Certainly don't report the same data using the different coding systems in the different lines, but pick whatever the line is most comfortable for you and report in that. And those are the NAICS, NAICS codes, SIC codes, and ISO class codes. If you can report your information using one of these classification systems, please do so. If you can't, but you have another way to extract this data, such as policyholder name search, please do that instead. You'll see there's no category for unavailable or unknown here because we do need specific data because of the express requirement from Congress on places of worship. So we do ask that you find a way to report actual or estimated information for your policyholders within this industry. As with many of the other spreadsheets, the workers' compensation element on this form will be completed by NCCI, California WCIRB, and New York Bureau, so you won't be required to complete these compensation, workers' compensation fields. Now, last but not least, is the reinsurance worksheet, which is now up on the screen. Final worksheet is on reinsurance. You will need to answer these questions for your private third-party reinsurance protection. You should not include any intra-company arrangements that you may have in place. So if you're for essentially capital requirements, you're sort of reinsuring companies within the same group for those purposes, we're not interested in that. We are interested in true arm's length third-party reinsurance that you're getting from an unrelated company. We strongly recommend that if you have an individual, unlike a lot of these other sheets, which really sort of rely on extraction of data from your systems, this one is much more of a questionnaire. We strongly recommend that if you have an individual responsible for reinsurance in your company, you should forward this worksheet to them for completion. This will help ensure the accuracy of the data we receive. In addition, when responding to this worksheet, we need you to enter actual figures in column C, that response column. We understand that in a complex reinsurance program, it may be difficult to provide a single answer, but if a response is provided as C addendum or C attachment, there's a very high risk that that information just will not be able to be aggregated into the results we receive. So really what we're asking you to do here is look at your own program, come up with what you believe is your actual limits figure or retention figure or all the other elements that are in here, understanding that it might change depending upon whatever the particular circumstances here. We're really looking for a best answer. So the best answer is not see my coverage chart. The best answer is, based on all the possible circumstances, my figure is, 100 million in reinsurance protection, and put that figure in. If you have any questions about how to complete that part of the worksheet, again, please feel free to direct them to either Veris, ISO, or Treasury. And again, also remember that on this sheet, you'll see there are some questions that are specific to workers' compensation. The rating bureaus cannot help you on this one. They don't have your reinsurance information. So we do need all insurers to respond to those questions, since those we can't get that information elsewhere. One data field I do want to highlight here is we do request information for reinsurance purposes for natural nat cat losses, natural catastrophe. We do occasionally receive questions about the relevance of this, so just pointing it out, and we We do it so we can make a comparison against your reinsurance purchases for terrorism risk insurance. It's sort of much alike to asking for non-trip terrorism risk standalone premium on the standalone worksheet. We're really doing that as trying to understand how the market works in terms of in terms of this one, how available reinsurance is for terrorism versus Nat Cat exposures. You'll see at the bottom there is a question, line 20. Actually, you don't see it on the bottom, but on line 26.
So Richard, we do have a question.
Oh, okay. Yes.
So the question is, if we fronted business with another carrier and then reinsured 100% back to us, would we include it in this worksheet?
Oh, you fronted. Let's see.
Want me to repeat?
Yeah, no, I think I understood it. So the questioner fronted the business for somebody else and then reinsured it. Well, you know, on the fronting, no. If you're fronting, I think what you would do there, well, first on the fronting, if you're fronting, you would still enter, that means you're the direct carrier, so you would enter whatever the associated direct premium is for that policy on the appropriate premium sheet. So, you know, fronting coverage, you're the direct carrier, that you would enter that premium in the appropriate place. I mean, one thing here is keep in mind this sheet is only asking for treaty. I think this is the answer to the question. This sheet is only asking for treaty reinsurance, so it sounds to me like this would be a clear facultative situation where you know, you've decided to basically front for somebody else and then reinsure it back. You know, so in that sense, I don't think it would actually come up on the reinsurance in connection with the reinsurance sheet at all. If I'm missing something on that and you want to talk to me about it more directly, I mean, please feel free to reach out. But I think in that situation, again, remember this sheet, and I should have said that at the beginning, it is limited to treaty reinsurance arrangements. Whatever facultative arrangements you have in place for a specific, that might be applicable to a specific policy, I mean, just ignore them for these purposes, because obviously if we started asking everybody for every facultative placement they had, we'd have a spreadsheet the size of my arm to the moon or something like that. So we are only looking for your sort of generic treaty exposure figures, and otherwise, you know, just enter any direct premiums independent of what other reinsurance you have. I hope that was responsive. Yes?
Yeah, we do have another question. It's, do you have written instructions that we can pass on to the individual completing the reinsurance worksheet?
I mean, there are instructions on that instructions document that I've highlighted a couple times here. I mean, I can go back to it again. If you go to our website, the instructions for that form, I mean, it covers the entire form. And if you go to the bottom, instructions for reinsurance nationwide. So at the end of the form, there's a set of instructions that, you know, hopefully, you know, provide a little more detail. I mean, you know, if you have further questions on that, obviously reach out to us. But you know, that would provide a little more detail, I think, in what we're looking for on those questions there. So, okay, going back to the form, just have a couple more lines to do. Okay, line 26, any other reinsurance exclusions applicable to certified acts of terrorism? We ask, that's looking for information on, if there's a specific location or line of business that's excluded, that sort of thing. Let's see. Or, areas within a particular metropolitan area. And then we do ask you in lines 27 and 28 for your the zip code associated with your largest probable maximum loss, again, and what that figure is. Again, that's tagged to, and again, we assume you track this in terms of just sort of general solvency issues. You had an act of terrorism at a particular location, what is the absolute the largest loss you could have, based upon the losses or based upon the coverage that you issue applicable to there. But again, the focus, while we're asking for the zip code so we can see generally where it is, the focus is actually on what the largest loss at a particular location within that zip code is. So with that, that's what I had in terms of the general remarks that I had. Again, we're happy to respond to any further questions. If anybody has any more, we can wait a minute, or we have been answering a few, or I'll just wait another minute or so while people might be typing. All right. Well, I'm hoping that we did get a fair number of questions as the webinar was going on. So hopefully we've answered those again. Oh, we do have one.
We do have one. Yes.
Okay.
Yes. The question is, for the state basis schedules, is the director and premium reported based on the insured state or the risk state?
You report it the same way. I think it's for the direct earned premium figures, it's essentially the risk state. It's the same place you would report it for statutory reporting purposes. I think that's the risk state, if I'm correct. But however you do it for state purposes, we want you to do it for the same purposes here. There are, well, I should say, let's see, there are some slightly different. If you happen to be an alien surplus lines insurer or a surplus lines insurer, you basically, the bottom line is you do it the same way as you would report it for state purpose. My understanding is admitted companies, report it as you would report for state purposes. If you report it to Alabama for state purposes, it should go on the same sheet for these purposes. I think, and I believe this is addressed in the instructions, I think surplus lines companies may be permitted to report basically in their domicile state, as opposed to everywhere in the country they're doing business. So we essentially, if they're allowed to report on that basis, then they're also similarly allowed to report on the same basis for TRIP. So basically the idea here is, duplicate what you do for state purposes on premium reporting and allocation for TRIP purposes. Again, leaving aside those exceptions for those relatively few sub-portions of NAIC lines that don't fall within TRIP. We just want you to take those out entirely. But once you've taken those out entirely, the allocation for premium purposes by state should dovetail with what you do for state reporting purposes.
Okay, another question. When will the recording be posted?
The recording, well, the first one worked. So hopefully this one will work. I would assume we can get them posted next week, if not before. We'll probably want to try to do it all at once. They're pretty big files, so I'm not sure if the guy that does that for us, that poses any issues. But my sense is we I would think no later than next week.
Okay, another question. When will the state information be available?
When you say state information, well, remember, the state, well, here's what I can say about that. For purposes of this data call, the form you fill out, I'm sorry.
The person clarified and said state requirements.
If the states are going to require anything in addition to this form for purposes of what they otherwise do in terrorism risk data collection, I simply don't know what it is. Aaron Brandenburg is the contact there, but he wasn't able to be on the line today. I know in past years they've collected some property information on a zip code level that we have not done. So I don't know if they're doing that this year or not. So you'll have to check with them on that. I should note as well, or actually, did we do that in this webinar already, Mike, about the naming conventions, or was that in the last webinar?
No, that was actually in this one, and I just sent a message to Sherry.
I won't do that again. So,
yeah,
I knew it had come up, so I wanted to make sure that. So yes, make sure it is the same form you present. Make sure you use the right naming conventions to get it to New York. Beyond that, in terms of whether they're going to make you do anything in addition to that, I can't help you on that. You'll have to check the NAIC website.
And that's what I just referred to Sherry to as well. That anything for the state property supplement that anybody has questions on, you need to refer those questions to the NAIC directly. Nobody on this call has that information.
Sherry, anything else?
I haven't received any other questions.
All right, then. All right, well, I appreciate everybody's time today. I'm going to turn the recording off here now. And again, thank you for your attention. And again, please feel free to reach out if you need anything or have any questions. And again, please try to get this done by May 16th. Thank you very much.